What's going on, guys? So today I have another video for you. The strategy today is actually a strategy that you can use on any time frame, but I'm gonna show you the strategy on a bigger time frame and probably next time on a smaller time frame, but it usually works on every time frame, so you could even scalp with it. But now I'm gonna show you how it works, so let's go. So in front of me is the gold chart, and what we want to look at is, are we again always, and what I start with most of the times is to figure out if we are on an uptrend or downtrend. And the simplest way to do that is to know whether we are above the 200 EMA or below it. And well, let's just change the charts real quick. Okay, so the red line is the 200 EMA and the blue line the 50 EMA. And if we take a look at the gold chart, we have been here on an uptrend for quite some time, and suddenly what happened here, we had a cross between the two lines to the downside, which means suddenly the momentum turned around completely and we had here a bearish momentum. Now chances are always after a bearish momentum or after the bearish cross here that we might turn around, and this is what we want to look for. So usually here, exactly where the cross is, this is where the turnaround is about to start or can start. I mean, obviously not always. If we have a cross like this, we can suddenly turn around and go to pretty low levels, but we always want to focus for the turnaround. And if you look at the movement here, we saw suddenly a change of direction. We went higher, but then we pulled back again, and this is considered here to be a double bottom, or if you look at the shape, it looks something like a W. I mean, there's different names, doesn't really matter. But the thing is, we never know if we will see, if we reach this point here, we don't know if we will see a break below this line here, or whether we will suddenly turn around and go higher. But the thing is, we are here seeing this double bottom being formed in more or less a straight line, which are basically the same levels at around 1680. But what we can see, looking at the RSI, is we have here a change of direction, or suddenly the movement on the RSI as well as on the MACD suddenly changed, and while we were here pretty low and here we reached the same levels, we suddenly went higher, which means this could mean the first, or this could be the first indicator for a change of direction. And now after we saw this, we can see suddenly the market is going higher. But the thing is, after going higher, we come again closer to this line here, which previously was a resistance line because we were not able to break through. So we don't want to enter here again, because we don't know if the market will go lower or higher from here. We could still pull back again and get rejected by this line. But suddenly what we see here happening is we have here a pretty big candlestick, and suddenly this candlestick breaks above this resistance line and the 50 EMA. So chances are, I mean, if you look at this candlestick here, if I zoom in a little bit, this candlestick was once until here, it was fully green and then it pulled back, which means usually when this happens, chances are that we will go for the next EMA, which is here the 200 EMA, but we still don't want to buy here yet. But chances are, like I said, once we have a big candlestick here breaking the first EMA, we will go to the next one, which is here the 200 EMA, but then we see a pullback here. But at the same time, we can here see after this break above the 50 EMA, the RSI is suddenly above the 50 levels, which means we are in this upper half, and this indicates that suddenly the movement and the trend is bullish and turning completely around, which means we could go all the way here, as you can see, much higher. And at the same time, looking at the MACD here, we are crossing the zero line at this green candlestick and suddenly turning completely around, and this also indicates that the trend suddenly is bullish. But if we form here a trend line, if we get quickly rid of all of those in drawings here, so we started more or less here with this bullish uptrend. Of course we didn't know it was one, but here if we take into consideration what we know is that this could be a potential double bottom, so the movement might change, as well as the higher movements on the RSI and the MACD. So we might see this as an uptrend, and here was the first touch and here is the second touch. So we now know that this uptrend might be starting, but we still don't want to enter because we want to wait for a better confirmation. And this is here number 3. We want to enter at number 3 when we retest. It is actually the second retest, but it is the number 3 of the bullish trend of the change of momentum here. And like I said, we broke here above the EMA, went to the 200 EMA and pulled back to the 50 EMA, which was also this kind of resistance area here. But at the same time, we can see we are above the 50 at the upper half, looking at the RSI, and the MACD is here also suddenly turning to the upside. So we want to look here for the cross or the retouch on the MACD. So this is the place where we want to enter, and for the entry is somewhere around the 50 EMA at this support line, and we want to put the stop loss to basically the next support line, which would be here somewhere around this line. You could go for the bottom of this candlestick here, but it really depends how long you are willing to wait. And for the risk reward, it's simple. We go for 1 to 2. I mean, if you're more experienced, if you want to go for some bigger profits, you could enter actually or exit here again when the MACD crosses to the downside, which would be somewhere around here. So the risk reward would here be 19.5, so about 1 to 4. Well, like I said, this is all up to you. but the setting is simple. We want to look for the change of momentum or change of direction, and we want to see here the RSI and DMACD turning to the upside while here remaining at the same levels, which indicates this double bottom divergence kind of bullish trending momentum change. And here we want to see some kind of a trend line, and then after breaking the first EMA, retesting the second one, and then pulling back again to the first EMA, and this would also be the trend line. So we have here 3 strike retest of the support line, the EMA, and the trend line, and this is where we want to enter basically on number 3 and then go up all the way to take a profit. Now if we change the time frame and go for a 4-hour chart, what we can see here is on the 4-hour chart we had suddenly a cross to the bullish side between the 50 and 200 EMA, and then we retested here the 200 EMA once again. And so basically this is your indicator that if we can manage to stay above the 200 EMA and find support like we did here, you see these candlesticks here, this is where you want to enter. One of those candlesticks are your point to enter. If you want to make it exact, we again take the MACD cross, which would be this candlestick here. But if you see this kind of small movement, I mean this is for gold basically nothing, it's not even 10 pips. So, and you see 1, 2, 3, 4, 5, 6, 7, 8, 9 candlesticks that just move back and forth between here and there. You could take any one of these and enter. So basically what helps again is this support line here. We are slightly here, we broke slightly below, but more or less we are staying at the support line levels, and this is the exact point, or where if you want to pinpoint how you enter, this is where you want to enter. Then going back to the daily, so this would be here your entry point, which is actually the lowest point more or less on the daily chart. And again it was here the 3-point start, the 3-point retest back to the EMA support line, and this is your entry point. So there you go.